This is the Market I Report here on the floor of the CME Group in Chicago. I'm Mike McGinnis for Agriculture.com, along with Tim Hannagan of PFGBest.com, a senior grain analyst there. Tim, I want to talk about the CME's latest talk of raising the daily corn price limits. What's your perspective on that? Should they raise those from 30 to 40 cents or not?
I think they should raise it higher. I think it should be the same as the wheat and the beans. I mean, you know, for decades they've had limits, and limits essentially just control the market. And who wants to control the market? The days of the government owning 4 billion bushels of corn and releasing it when prices would go up, or holding it back when prices were down to control, are gone. We're in world markets now. World markets won't stand for markets being closed, and you need to expand the limits. We need the markets open so that we can address the issues that are coming up to the market, not just by the day, but by the evening. You know, with the markets open almost 24/7 now, so I'm all for expanding the limits. I'm surprised they haven't done it.
The proposal as it sits is in the hands of the CFTC. We'll have to wait and see how that turns out. Let's turn our attention to the corn or the market play, so to speak, right now. What do you tell farmer customers out there that are trying to figure out what is the market play right now for, let's say, the corn market?
Well, the obvious. I think what you have to do is just trade the next weather forecast. We're in a weather market right now. Corn's in pollination. Beans are getting ready for entering the pod setting stage. But the big index and trend following funds right now, they're just looking at the next weather forecast. As we saw last week when they talked about this heat dome coming in this week, it came in, they played it, they rallied it from Tuesday's crop report last week into Friday, again on Tuesday. Now they're pulling it back with a little bit of rain in the forecast. But boy, there's a lot of talk about the heat dome re-entering into the Midwest, particularly in the eastern grain belt next week. And I think when we come in Monday, they're going to be trading that next heat dome, and prices are probably going to trade higher. I'm coming in tomorrow and I'm going to buy corn and buy beans and buy wheat. Wheat's the tail of the dog, but it's going to follow corn, and I think we're going to open up higher to start the week. But keep in mind, it's end of the month, so any rallies next week, you know, funds are going to take profits because they love to pay those bonuses on month-end profits taken. So.
Okay, we of course just talked about corn on the cab ride over. The cab driver was talking about the corn prices. Everybody's talking about the corn prices. Let's talk about soybeans. There's a story there with South America harvesting a record crop this year. They are expected to plant a record crop next year. Is this soybean market headed for a train wreck, or?
Same verse. It's the same verse every year. I mean, last year they're going to plant, and they're talking about production outweighing the demand. The year prior, go back 3 years, it seems to be the same old story. They can't cut down the rainforest fast enough. They're finding the land. U.S. companies are going down there. They're buying land to plant, but you know what? You can't keep pace with demand. It's all about Asia. China's got 22% of the world's population, only 7% of the global land. Needs are just too great. I think we're in for a big year. I think cash prices and futures will make new highs over this year and next year. I want to be a strong buyer of grain. If I'm an ethanol producer, a feeder, or an exporter at harvest time, I'm looking for a big spread between the cash and the futures at harvest. Big demand this year.
Okay, thanks, Tim, for your time. Tim Hannagan, Senior Grain Analyst for PFGBest.com. I'm Mike McGinnis for the Market I Report here on Agriculture.com from the floor of the CME Group in Chicago.